are back. After how long has it been, Lucas, since we recorded?
Oh my God, it has been a while.
A few
Listen, we're gonna go into it. We took a little break, and by we, it's me. It's not BJ over here. I'll take the blame for this one. But it's been a week, and 2 weeks. 2 weeks. 2 weeks.
At least.
And unfortunately, it's sad. Listen, we're staying consistent with recording. We're not going anywhere at all. This is a point of my trading where I had to step away, unfortunately. So we'll get
more into little relaxation time.
Exactly.
You got to take a little reset time.
Amen.
Yeah, just the trash trades were just sort of piling up, and just wasn't feeling it. And everyone,
what can you do?
Has to deal with it. We're young. We've been studying the pressures on. You have all these fuck faces who pretend like they're making $1 million. Are they making $1 million?
Nope.
Someone has to, but most of them are not. But they'll make you think that, and then you have a million other things. You got school, you got fucking work, you got maybe bills. All this shit will make you crazy, And then you put on trash trade after trash trade after trash trade, and then you're like, oh my God, is this what we're doing for a show? How many should we do? 2 or 3 examples so I could just what the fuck's going on here? And then
at a certain point, I think the trash trades pile up. Like I'm suffocating in trash trades. I had the fucking big ass red period, found my feet a little stable, and now I'm back in it. And that's something I'm not ashamed of. I'm definitely open to have a talk about this. But unfortunately, I made the decision just to walk away from charts in general, like everything. I did not see a chart for a whole week. In fact, it was 10 days. It wasn't a week because I started in the middle of the week. And I literally left everything, dropped everything. Unfortunately, I didn't want to record because I was looking back on the charts. I was reflecting. I just wanted a clear head to focus on other things. And unfortunately, hopefully that won't happen again. I'm trying my best to prioritize my trading and my performance as much as I can in my life. So I definitely didn't want that to be sabotaged. And I apologize if you guys were wondering where the episodes were, if we were losing a dedication to the show. We are absolutely not. Unfortunately, it's something that I just had to do, which hopefully it won't happen again. And yeah, man. Well, we've got some good lessons. This is a pre-break trade. So you're going to look into my mindset. You're going to look into all the mistakes I made, the reasons why I took a break, everything.
But real quick, roll the intro.
Order filled.
Saw the opening. I was like, you know what? Let's just fucking crack it.
Damn, I love it.
Hit him with the sauce, buddy.
Anyway,
Pause.
We got a good ass trade. This is like I just said, it was pre-break. So I was in a mentality of my trading, and this is perhaps one of the most important lessons I learned in trading. One of the most.
Okay.
I had a very eye-opening moment, how I was seeing the market wrong. I was disadvantaged, I felt, after this trade. And this was an innocent trade, okay? So if you can look and see, we have liquidity in the form of equal highs, right? So, or relatively equal highs. And I was going to play towards the sweep of the highs. You guys know how it is. This is more of a spontaneous type of setup. I decided to try enter as a sweep of this low, maybe a sweep for movement upwards, etc. And this is this is something where I've kind of experimented with. It's not my model. I don't like to trade it. You guys know me with the 618 or whatever, and etc. Anyway, let's just roll a couple of candlesticks. I'll give you the gist.
Explain the 618 real quick.
Oh, okay, absolutely. So I like a 618 trading. So if there was a piece of price action, that we were heading down like this, I would enter a short on a 618 retracement. So if we came back up here, we swept this high, and then I'm looking for a continuation downwards. So that would be a 618 if you draw a fib here, or above a 618.
Yeah. So this is known as often the golden zone, or if you're an ICT SMC trader like we are, the OTE area, which is between the 0.618, some people put it as a 0.62,
Yep.
and the 0.786, some people put it as a 0.79 areas of the fib. You usually want to anchor the fib, which will be the 1 or the 100% at the bottom or top, the initial start of the move, and then the 0 goes to where the retracement part starts. Golden zone, OTE. I mean, this is actually one of my primary models, one of my best ones. But you do want to be entering in the direction of the order flow and the direction the market's really going, because it can be a little bit tricky. But so far, just I was going to interject, I do sort of like the idea behind your trade, but I think I could see a little issue. I like to see where it goes here.
Absolutely.
So go on.
And anyway, this is, as VJ just said, referred to as the optimal trade entry. ICT wise, it's more in between the 618, 786 type of area of a retracement, and then looking for a continuation down.
Yeah, the 0.705. I forgot to add that. I'm sorry, Luca. The 0.705 is like the super special zone because it's actually right in the middle, and you'll notice that often hit. So I forgot to add that in there. That is like if someone's saying OTE and they're talking about one exact price level, that's usually the level they're talking about.
Yeah, absolutely.
Right.
But
keep going, brother.
Keeping with my model and how I trade one specific setup, which is what we just said, the OTE model. I have my optimal trade entry, and then I see a retracement down. But this high is not in the 618 or below. Normally, maybe that's in a form of a fair value gap, etc. But it also has to be layered on to multiple factors of top-down analysis. And we'll see that this is one of my main flaws here, because this is a super small time frame entry. I normally go for higher time frames, 5 minute, whatever. I was just feeling a 1. So I kind of set up this trade, which
this is on the 1.
This is on the 1.
Aye.
So, this kind of played out a little bit on my favor. We kind of.
Oh my god, I'm hurting. I'm hurting so bad here. I think I know exactly what's about to happen. Let's see this.
I think no, and then there was a straight move down which stopped me out. This is criminal. Having a stop, fucking, how many points? Like 10 is ridiculous. This was a trade that.
If it was in the right place, keep going.
I think this was
okay to have a stop that tight. It fits in the right place. Is what I meant.
Yeah. You're right. If it's really soupish, then maybe. But this trade was not well planned out, and for a reason which I will explain to you further on. Because it really depends the market conditions and what I evolve as my trading edge. This is something that took me so long to realize, but I'll just briefly explain it to you after I explain this trade. It was just I was looking for these highs, impulsed in on a whatever entry. It was a good idea, right? But it was a whatever, right? And sometimes price can come very close to these highs, and then completely go, change in order flow on lower time frames and completely reverse into an actual 618 entry of this whole leg. This whole leg, we get a 618 entry and then a continue upwards into this liquidity, which is what happens. You play a bit of the candlesticks, you kind of seen that high again, and then we flush down. And one of the things that I've kind of realized is that higher time frame targets are very potent. They're followed. They hit a lot. The only thing is, chasing higher time frame targets on smaller time frames, like the 1 minute, it was my a very big mistake in this case, because I really wasn't looking at the bigger picture. We came so close to these massive, targets. Everybody sees these targets of the sweep of this high. It's everyone's PTs. And then as soon as we get close, we start to retrace down. We start to move down into an actual optimum trade entry, which I'll explain now. If you take the fib from the high of low, we can see that we sweeped this low into the 618. I think we stopped around here, and then we saw a move upwards into these highs, which was one of the reasons why my trade failed. Was it's not the price action, or it's not the price target that was the issue. It was me trading higher time frame targets on lower time frames, which sometimes they hit if it's a real strong order flow and you just go for it. You can scalp these types of things, but it's not optimum. It's not high quality. You can find better setups, and that's what it was, something that I was not looking for. I just decided to play a whatever type of trade because I wasn't looking for the better setups. I could have been patient for here, but I wasn't, and I just did whatever, stopped me out, made me red for the day until I really realized my mistakes, which was I always look on higher time frames for targets, whether it's these relatively equal highs or lows or whatever. That's what I played towards, but I like the adrenaline of actual like shorter time frame, 1 minute or whatever. So I'm drawn into that sort of setup. I'm not patient enough to actually wait for a high quality setup on the higher time frame, and I just want to trade it. And of course you can trade it if you're aware of setups forming and the and market conditions. But this is one of the reasons why this 1 minute trade didn't play out. VJ, do you have any?
All right. Yeah, I have a lot to say.
Yeah, go for it.
Okay, I'm gonna show you a trick to avoid this. What you did, by the way, this is a very common loss that I was starting to that I take. But now because of just some things that I do, especially when I do OTE type of setups, I stay away from the 1 minute, especially if this one thing happens. So go from the sweep to your target. This is called an implied um, uh, dealing range. So that we're gonna say this is something I forget. I didn't remember the name, but take a fib, or even if you want, like, I don't know if you have a premium discount like Ganbox or whatever, but go from the dealing range to the bottom sweep, the entire range. Go from the target, the equal highs,
So
all the way to the sweep, and look at the 50% to get the premium and discount of that range.
this.
Yes.
Okay.
As you can see, you're buying in heavy premium towards the target.
Yeah.
Right. So you're chasing. Okay. Just like when you said, like, oh, the OTE of the other way. So you could go ahead and like switch the fib so that the OTE is towards the bottom.
Okay.
I'll show you what I mean. But you see, like, when you bought up there, especially at a 1 minute, that's chasing. Now, if it's on like a 5 minute range that's made there, and there's reason to say maybe it's like, the second stage distribution, or accumulation in this particular case, on the way up. Like, usually the 1 minute, that's a trick. And what ended up happening, and this is why ICT and SMC will never really go out of style. I mean, it's just the way that the market moves, is because it entices people who are not willing to do the higher time frame stuff to just become pattern traders. Because
Exactly.
what was that was like you took a OTE long after double tap that area. So it normally does play, and it gives you a little pop to stay in there, but you're playing myopically. And then, like, when it goes again, people will be like, oh, there's a sweep again, right? And it's still not a discount of the whole leg. But then it gets another type of pop. Yeah. And like, go to the 5 minute. I'm guessing there's fair value gaps in these areas.
Yeah.
Right? Okay, yeah. So you could be like, yeah. That's OTE of that range, and then it goes there, but you're not looking at the whole picture. And then it even plays, but then it quickly fails, right? And then, like, go to the 15 minute right now. Is there another fair value gap right there at the low, or is there a 15 minute fair value gap?
No, there's not.
Because I can't see.
There's no value gap
There's
at
no
that low.
15 minute.
No.
Okay, but there's a 5. Is there?
Neither. I don't think. This was just low.
Is that a 1? There's a fair value gap right there.
This.
Yeah. and there's an inverse on the other side. Are these a 5? Are these 5 minutes?
This is 5. Yeah.
Yeah, and then look at the inverse on the other side, on the left. Yep. And then draw that out. Those are in the OTE, right?
Yep.
Imbalances that are sort of holding the price. Now that's based on that whole range. Now that, if we get a more confirmed breakage structure here, bodies are holding so far. Body didn't really hold there, but we're just seeing the reaction go. I can't really tell if the body held on that one candle. Now I'd be looking for, okay, you see how like it broke structure right there?
Yeah, and a
When it made
retest.
that short-term loan, the retest, yeah, you could buy again that area, and then you could place your stop. And it shouldn't be at that low where you win the OTE. Where so go back to your entry. So that's a safer entry, as you can see, and then that one does fulfill if you just wait. But you see where you took your entry because of OTE, but then you place your stop in OTE.
Yeah, exactly.
As if you know when it's going to happen. Your stop has to go at that low if you believe in it. So that's another thing that I was doing that was causing my losses a lot, where I would enter and just assume I knew exactly when it was going to go because it looks so solid to go now.
Exactly.
And in reality, if you look on the shorter time frame, you entered on the 1 minute, right?
Yep.
Only 1 minute reasoning. So what happened on the 1 minute right there? It broke structure. It displaced down and it held under a low. Didn't immediately wick. And then it used those fair value gaps down there to continue a lower time frame sell model, which was a higher time frame retracement, as it often does.
And
right, and you see the OTE. You see the OTE short that it sets up, the 1 minute OTE short right there.
Yep.
And it does a sweep, but this one's valid because for like you're like, oh, we're too high in discount. It seems like we're going there, and maybe we're just like it's risky to short with equal highs above you unless you know that it's short term and it's likely to retrace. Sometimes you could take risk on these type of shorts.
Yeah,
especially when you see
I
those
definitely
type of rejections.
it's just naivety and neglect of an actual better setup. You know, I'm not trading the real setup I'm looking for. I'm just trading a part of it is the real reason for the failure of this. It is good. It's just a part of the actual prediction. If this was just a higher time frame, it would have worked out. So it's always that's something you can do. As traders, you can get trapped in the smaller time frames. Sure, your model can work in the smaller time frames. You can be trapped trading your model in an actual bigger model, and that causes a lot of stop outs. This model that I took on the 1 minute is absolutely valid, right? The sweep of the low, it's in optimal trade entry, and I'm looking for those for those highs, those targets, and of course, you know that is profitable. It's just I'm not looking at the overall bigger picture, and that's something where I'm just neglectful of. There is a better setup, even if this executes on the 1 minute. There is a better way of trading this, but I decide to I want to give in to my urges and my know, my feelings of adrenaline, and you know I just want the rush of the 1 minute. And
this I was gonna say, is it? I'm sorry. Go ahead, Luca. My bad.
No, it's just a tendency that I've had for a while trading, and it's something that everyone can relate with. You know, you just want that price target now, that you neglect the higher time frames and you go straight into the 1 minute.
I feel like you use the word naivety, but I was going to say that I think it's more impatience.
Yeah, absolutely.
Because that's why I said it's sort of a chase entry. Because you see, even the second one, where it's like the 5 minute fair value gap, doesn't discount the range, has a much more powerful bounce, where you might have been able to get a trim off at like 50% of the other range instead if you're gone. You know what I'm saying? Like that first one doesn't even allow anything. And at least the second one, like if you do a 618 to 61 OTE to OTE, which honestly is like we talked about it before, and I was like, oh no, I don't really like that. But what I found out is in seek and destroy conditions, I do like it. Yeah. So that's actually my primary strategy. And where I'm like, oh yeah, I'm not getting out the whole thing because if I'm wrong, it's just reversal to reversal area. At least I get the trim off and I can understand what's going on as the price is fucking with me. It's dangerous, but it's something that I do. And I find that it's like far more valid in things like this. And like, if you're like, yeah, this could bounce, but I'm just unsure of this, let me take half my position and go to BE, you'd be like, oh, I got some gains and that saved me. But the best play is to just wait until you get to a better, higher range. You can take a chance on it, but understand, yeah, that's on a smaller range, but the bigger range, you could go down more.
Exactly.
And that's when I think of it like that, and I'm like, okay, it's like this could cause a bounce, but it's not as likely as this one. Do I want to wait? Do I want to scalp? Do I want to do anything about any of this? That just sort of depends. And then on this one, like you could wait for almost confirmation. Like it makes a short term low and it breaks it. It doesn't retrace, but that short term low and the break is the confirmation.
Yeah, and I just
You know what I'm saying? Or short term high in the break. I'm saying
when the market engineers liquidity and you see these relatively equal highs, there is a way of identifying when this will happen, so you don't get caught chasing the final push of a higher time frame setup, and that is I'll just give you an example. This is one of the trades which made me realize that I was a problem. I really was a problem, and it wasn't my model, because I'm trading the same markets, the same market conditions as when I was super consistently profitable, and it's just me that is not seeing the setups and not executing them not executing the setups well, because the truth is, I know that how the market works in a way that is more in depth and detailed. For example, if you see all of these relatively equal highs and lows, the way they make liquidity is by sweeping. Like it or not, they sweep liquidity on the way up. Whether this high is swept here, and these highs are swept, they will go for the low-hanging fruit and not the full picture. This is if they want to engineer liquidity, they want to leave the liquidity for some time in the future. They will just take the low-hanging fruit before reversing price straight away. So you're gonna see that all the full take profits won't be hit. Just the low-hanging fruit. So it's like what VJ just said, which was absolutely correct, is trading from optimal trade entry to optimal trade entry is literally how to take as much risk as possible out of the table, because you never know. There could always be a time where the market makers start engineering liquidity against you. They'll get straight right close to your price target and then start reversing straight away. So it's really about taking the low-hanging fruit, and it's about trying to preserve as much risk as possible in the process of sweeping those highs.
Yeah, and also just looking for warning signs. Like a lot of times, like when you see things like this, there's actually pretty decent short-term short setups that are forming. And, if you're like keep trying to long, thinking like, it's about to bounce, like you can be holding a losing position for a while and sometimes cut at an extreme loss. When you can sort of see like, it's setting up a short-term short, I can get out, just see where this ends.
Yep.
And then where that retracement, does that make sense to me, where it starts bouncing for like, yeah, this is probably real if I believe in the initial stop run that powered this move and these newer stops that are going to, and so then it does actually come down to higher time frame analysis, because these patterns will just show up both ways. Like if you just showed up 5 minutes later and you just started doing the analysis, you'd be like, okay, we left some of that, but like, we did sort of sweep these and we broke structure to the downside. Oh, like maybe I should be looking for shorts. And like,
exactly.
So essentially, are you saying that your loss is based on when you just show up to the charts? That's not good. You want to figure out the narrative and where you're at. I was back testing with one of our friends earlier today, and he sort of shorted into a place where I longed, and I was like, yeah, that short is valid, but I'm like, here it's probably going to long. And then it proceeded to long with much more ease. Didn't have to have perfect execution, and you just wrote it for like 3-4 times as many points. And like, let's say your phone froze or whatever, you lost power for a little bit and you came back, like you'd have time to be able to enact. Like your longs until it got to the right area, you had to be so precise in exiting.
Exactly. Yeah.
And that's just like it's just sort of the lesson about like patience does really pay. If you just like really just like allow it to give you the setup in the optimal areas, then you might really be able to just much more easily avoid losses and major losses.
It's definitely discipline too. I think that some people, they're patient enough, but don't don't do it because they don't have the discipline. In reality, it's kind of more of a universal thing, where you really need to be as disciplined and patient as possible to execute your setup in the entirety of the most high probable setup on the highest time frame, if that's possible, or if that's what your setup allows. And unfortunately, it's something that I'm struggling with. As a trader, I'm so drawn into these lower time frames that sometimes the higher time frames just get completely neglected. And there is an aspect of my patience. I don't want to be waiting, 2 hours for a trade, 3 hours. But at the same time, it's my discipline. We all know, whether if you're a beginner or an expert, you want that thrill. You want that rush of trading. And sometimes you can do it completely subconsciously and just, decide to please your urges and go into the 1 minute. It will cause a lot of stopouts which you would have known would have happened if you would have looked at those higher time frames. The higher time frames in reality is one of the most important factors for preventing stopouts on smaller time frames. And that's something that I'm struggling. Yeah, go for it.
I got a tip for you.
Go for it.
You're trading options. You do 0 days or 1 days or both?
Both.
Depends. Okay. I think what you should do is, man, I thought I had a good point, but I forgot the point.
Oh, you good.
That's so terrible. Because I was like, if you buy these options, this is what it is. Why don't you just trade on the 5 minute and get used to that? 5 minute minimum. Trade on the 5 minute minimum. Play maybe 1 days if the 0 days are sort of whatever. Confirm the trade there. And then, because I was going to say, if you're trading futures, once your 5 minute, retracement, 618 retracement idea works, go into the 1 minute or 5 minute from that area and then look to see if you want to get confirmed there and then take an entry there or not. Okay. You doing this 1 minute thing, there's no point. And the 5 minute, it goes by pretty fast, and it's called a short time frame for a reason. For us, especially when it first started, maybe it seems like it won't have that many setups. But to be honest, I watched the 15 minute enough to know that you'll get setups on the 15 minute, a couple, maybe 3 or 4 every day.
Yeah,
so,
pretty often actually. It's
pretty often.
It's something that it's actually, you'll be surprised what happens if you go to higher time frames. As day traders, you see all those, those billboards, those headings, $1,000 in 5 minutes. In no time at all, you can get in and out of the market, no problem, no risk, whatever. So all the beginner traders, they just jump straight into the lower time frames. The higher time frames is literally the key for the information.
Well, and also, the lower time frames, people are like, "Oh, I get more information." It's like, no, you do, and most of it's rubbish because it's hidden in these other ones.
Exactly.
And literally, there was me and Chester were back testing, and there was 10 minutes of a 1 hour candle that made me be like, yeah, I don't trust your position here. And then it failed. Over 10 minutes of one, if you're looking at the 5 minute, it didn't really look like a sweep. If you look at the 1 minute, it looks like nothing. Everything else looked like it was a beautiful place to long.
Exactly.
But if you weren't paying attention to the fact that it was a wick on the 1 hour, definitely a wick on the 15 minute, then you just literally just longed into a sweep and you're going to lose. And then you're wondering, why is this not working? It's going slowly against me. You know what? I'll ask. That's what they do if you're not paying attention. And that's why if you avoid the noise, if you wait for the 618, then you have to be like, what's the range that matters? And on the 1 minute, it's just nonsense ranges. Do they work a lot on the 1 minute and 30-second even OTE and these type of 618 type of entries? Absolutely. But if you're only defining the range there without looking on any other time frame to be like, does this exist as a real range, as a real swing high or low on the 5 or 15 minute, you'll be shocked and be like, oh, I just entered at the high of a 5-minute candle. What the fuck?
Exactly.
And then you're just like, this is terrible. And then of course it's going to go lower. This isn't even a thing, but you already have money in there.
You're already in.
If you look at the 5, yeah, you're already in. So if you look at the 5 or the 15, especially with options, and you wait for that, you'll get plenty of setups and like probably get a pretty decent run. And I actually think that on options that, we had a homie who introduced us to like SMC a lot earlier. And I remember when he was trading options, he had a mandatory 30% trim. You should probably enact that because I'm pretty sure you see 30% flash and you're just like, yeah, but it's not on my target. But the thing is, you're trading money, and we should, at our stage, have monetary trims.
Absolutely. And also it's really about the low hanging fruit too. You have to take some off the table. You can't wait for those whole price targets. It can engineer liquidity. You never know, especially if you're not looking at those higher time frames.
It's true. You should, if you're set up like, if like for me, if the weekly setup sets up for it, like, the news has already started hitting, 8:30 news already hit for the week, the volatility sort of in, the draw for the week is sort of clear. Yeah, you can hold more, but you have to understand the conditions you are in. Like tomorrow is Monday. We have a red folder, but it's still Monday. You never really know which way it's going to go. Tomorrow, if I take any trades, it'll be 618 to 618, OT to OT type of shit.
Yep.
705 to 618. Let me get out of there. Maybe 705 to 5, the other halfway. I don't care because I don't really know what it is, and holding tomorrow is going to be risky when you have no data for the week. And then as the volatility injections come in and then they press and you can sort of see more come in, you can hold a little bit more. But sometimes it's good to hold, and you do want to generally practice holding your winners. That's exactly the thing that's hard for most traders to become profitable and to become like good traders, but that is what you eventually have to do. However, in the beginning, you do want to pay the trader. You do want to understand that, you're doing this thing. And then like sometimes when the trades are dangerous or whatever, there's no problem in getting out and instilling more confidence in yourself and just allowing the process to get there and to just watch with no danger. Like always, like, and so 30%, you got to think like if you're buying a $50 or $100 contract, like 30%, it's $15. Yeah, on a $50 contract, it's $30, and then you do that 3 days in a row. Like now you could get another contract. Not to say that you should, but you doubled up. Like you have an extra $100 there, and just keep doing it. And like you have 2 contracts, you take one at 30%, and then you just see like it's options, man. You can actually like multiply your money sort of fast with like not having to wait to all that and just be like, yeah, I'll just take this here because I'm just trying to build this rapport, reduce this risk, and then see where the trade would go and what would happen if I held it. Who cares?
Absolutely. And listen, it's always going to happen. There's going to be mistakes like these. This was a real eye-opener, though, because this was before my break. And now looking back on these trades, especially reflecting on how I used to trade, it's like I'm missing this whole part of the market. It's kind of like trading while your eyes are closed. You're just feeling, you're putting your fingers on the screen, on the chart, you're feeling the candlesticks, you're not seeing them.
Yep.
And unfortunately it's something that I've got to admit, and I got to be open with, and I got to talk to people with, it's because it's something that is so fundamental to trading that how can I not, stay silent and just keep my pride, or, keep the public view on how I'm such a good trader. No, I want to say that I fucked up. I want to say that I'm learning. I want to say that, I'm going to improve, because at the end of the day, that's how we build. That's how we build as people, as traders, and more of a community, to be honest. And we appreciate you guys for everything. The Discord is crazy, super active. We love the kind of family feel. It's a real good family in there. And yeah, we appreciate you guys a lot, and thank you guys for waiting for us, bearing through us for this week. because it was sucky, man. I'm sorry. I apologize. We'll get through it.
No need to apologize. Sometimes we need breaks.
Amen. All right.
We'll
But
bring
listen,
the show. We'll bring the heat.
we'll bring it, man. Every week, you better up to date. We're back. We're back. We're
that
back.
Hot shit. We'll bring that hot shit. Literal turds.
Amen.
Trash turds.
Oh,
Turd
maybe there'll
trades.
be a pickle one next episode. You never know. You got to find out, though.
Goodness.
You got to find out. If it is,
we'll see if we can get a fucking
see.
absolute
But anyway,
human turd in this.
we're 100%. We're definitely gonna. Anyway, we'll talk to you guys in the next episode. You guys are fantastic. We appreciate you guys very much. And we'll see you guys later. All right. Bye-bye.
Bye.